you have to remember what drives the market. And what drives the market ultimately over the long run is companies earning money.
Yep.
And if companies continue to earn and earnings are continuing to rise, then the market will rise over the long run. But in these short month-to-month, day-to-day cycles, you can expect some volatility because we have a government that's fairly volatile right now.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt Walters, and I'm joined by John Markfeld.
Good morning.
And Eli Freeman.
Excited to be here.
Let's go. All right. We got a beautiful Tuesday morning. It's actually kind of cloudy and cold, but
it was beautiful yesterday.
It was beautiful yesterday, yeah. So, hot topic today, headlines was, coming out of the weekend, was the tariff situation with Mexico, Canada, and China. Trump, coming out and announcing that he was going to put 25% tariffs on Mexico and Canada, 10% tariffs on China, and there were a few variances in there of certain rates that were maybe a little higher on certain goods. But that was kind of the general plan. Market reacted, right? Sunday night. Futures opened up and they were immediate. They were down, like the Dow was down like 600-700 points coming into Monday morning. Opened up down very big, and then all of a sudden you saw Mexico say, "Hey, we're going to put some troops on the border, try to help you guys out there." Trump said, "Okay, we'll pause for 30 days and see what happens." Market starts to come back a little bit. Canada says, "Hey, we're going to actually do some stuff." Market comes back a little bit more. And so the market ended up basically flat to positive slightly by the end of the day Monday. So it was a big swing, big change of events. Initial thoughts on kind of what we've seen over the last 24 hours.
It's no surprise Trump's coming in swinging. And with the swinging, you can expect the market to try and be as on its toes as it can be. But all of these policies, they're not going to matter very much to the market until something actually sticks. Because right now, every form of policy that's being proposed and is being acted upon is kind of written in pencil. And until we start to see something written in pen with some strength behind it, the market's just going to probably trade sideways or unless earnings just really take off. But the market's trying to digest what's happening. And if you can imagine, if you were a trader on a desk trying to pick which companies to go and invest in an environment where tariffs are being imposed, being taken back, changing day to day, and trying to make a prediction on should this be good for Apple or should this be good for Palantir, there's significant variance day to day. So the market, it's going to be a difficult time to see the market move in any big direction while this is all happening.
Palantir's kicking butt today.
Palantir is kicking
they
butt.
destroyed their earnings. So I think you're still going to see companies that do really well and the earnings are going to continue to fly. And I think earnings are going to – I've said this for a million years, like companies determine the market flow, earnings of companies, right? But when you get overinflated to where we're at right now, it's harder to keep doing that, right? It's harder for companies to keep beating the expectations or meeting expectations even. So when you throw in the uncertainty of tariffs and what they're going to do, because here's the deal with tariffs. I've really researched into this and I've dove into this head first, right? Like, what does this mean? Because I hear all kinds of stuff from both sides. It's going to destroy America or it's the right thing to do and all this stuff. What I've come up with is that we've had these forever, and Trump had those in his first 4 years and the market boomed. So it's not like the tariffs are a new thing. They're not. And you can go back in history, our entire country, at some point we've had tariffs started and they've been on and off ever since. Well, when I did the research, China, Mexico, Canada get a far better deal than America on trade. Far better. Whether that's right or wrong, because China, Mexico, we consider developing countries, so you can't get the same from them as you give to them, right? If you want to be nice and so on. Canada shouldn't have any. They should be similar to us, but we have let things kind of get out of control. And I kind of like the firm nature. And I also find it interesting that once we put some firm nature stuff out, that Mexico and Canada decide to play ball. And this is the point. Like if they were horribly unfair and Canada and Mexico they felt they were very unfair, they would not work with Trump. So I like the idea that we're even if they don't end up being as bad or as high or as crazy as what they have been let out to, what we've been out in the public, I think they serve a purpose, and I think it's a long-term good for America.
Yeah.
So I'm kind of excited about that. As far as where the market goes, market's overpriced. So anytime you have any type of uncertainty, I think that can start selling, right? I mean, there's like selling when there's uncertainty on the market. So the tariffs are uncertain, or what's China going to do is an uncertainty, kind of puts fear into the market. And at this stage of the market cycle, I think those things can be overhyped and oversold off, like on a day like Monday. Of course, like you said, it fought back. It was just kind of interesting day. I mean, it's amazing how all that stuff kind of works. Again, it goes back to corporate profits. Can they maintain? Can they keep beating like Palantir did last night? And if they can, then all this other stuff will eventually, the market will win.
Then that's a point that we should bring home. Whenever all this news is coming out and things are shifting day after day after day, you have to remember what drives the market. And what drives the market ultimately over the long run is companies earning money.
Yep.
And if companies continue to earn and earnings are continuing to rise, then the market will rise over the long run. But in these short month-to-month, day-to-day cycles, you can expect some volatility because we have a government that's fairly volatile right now in making decisions and repealing decisions, and with the Department of Government Efficiency that's coming in and doing things that people aren't even sure what they're doing.
I love that department because hopefully it'll help us get out of debt, like just get rid of things that are stupid. But but if you listen to like both sides of the issue, I mean, it's crazy what one thing can sound great to somebody else and just seem like a complete nightmare to somebody else. But ultimately, it comes down to corporate profits, and will they continue as they are? I know we're going to get into some cool stories from Eli here. Another thing, like the Fed is part of this conversation, right? And the interest rate. So, Eli, you were talking before we got on air about the story you heard, and I think it was from J.P. Morgan, right? Where tariffs are going to keep the Fed from being able to lower rates. And expound on that a little bit.
Yeah, I joined into David Kelly, who's the chief economist for J.P. Morgan. He did a webinar yesterday and spoke for about 20 minutes just on the specific tariffs that were proposed on Mexico, Canada, and China. And basically what he was talking about was because of the cost of those tariffs, that would create about a 1% charge of inflation on specific goods. And basically his base case was if these tariffs remained, then there's very little to no chance that the Fed would even be able to cut rates because of high inflation. Now, his kind of back off, and now granted that was changed there like an hour after the webinar, the tariffs were. But his case was that's probably an unrealistic expectation to maintain those tariffs at the levels that were proposed. But we could probably see something like 10 to 15%, and that not impact the economy in a major way.
Yeah. Somehow it'll come in between where we think the worst is. And Yeah.
Sorry, I was working, so I have no idea what y'all said in the last 60 seconds.
We've had good conversation. Hey, watch the podcast later.
Yeah, sorry. Never stops. Okay, so Eli, I don't know how to transition because I don't know what was just said. So what was?
We're talking about tariffs. We're talking about cost of the government, revenues to the government, and hopefully in some way our government's starting to work towards a more balanced budget.
Yes,
so
hopefully.
And truth be told, that's a lot of what the tariffs are for, right? Like Trump is trying to balance the budget so that we can start to get our budget under control. Well, I don't know why I did this. I went through the 50 pages of tax proposals that Trump's team has proposed, and there's some pretty interesting ones in here. Some of them are revenue generating, and then some of them are costs to the government. So wanted to just go through a couple of these and hear your thoughts on them. I'll kind of just throw them out here. So one of them is repealing SALT deductions, so state and local tax. So basically taking away the itemized deductions for your state and local tax. That's a way to generate revenue for the government by decreasing itemized deductions for individuals.
And that was a big thing that a lot of people in high state income states, right, that really didn't like about what Trump did the first time, because that really hurt hurt those people in like New York
like
and California,
New Jersey,
because there was a limit of you can only take 10,000 right on the SALT deduction. So getting rid of that completely will
create revenue and create enemies.
I don't think
exactly right.
Yeah.
Well, and to me, that's a lesson on always remember brackets aren't everything. When you're doing tax planning, oftentimes we silo ourselves into saying, well, I'm in a bracket that I'm happy about, knowing that there's deductions, credits, all sorts of ways that the tax law can be maneuvered to your detriment whenever you're doing tax planning.
Well, and, to that point, like there's some argument looking at like that kind of, there are people in certain states that benefit from that more than people in other states, right? And so it's almost like the federal government subsidizing high tax rate states, right? Like New York and California. And so getting rid of that puts the pressure on those states too. If you want to remain competitive, you got to figure it out on your side, not get some benefits from the federal government.
Right.
So that's one that could cost consumers. Now I want to talk about one that applies to very few people but would be good for some people. So proposing eliminating the estate tax. So
just altogether.
So for those of you who don't know, if you are single and your estate is somewhere around the ballpark of 13 million or more, every dollar that you have over that 13 million is taxed at 40% upon your death. It's called the estate tax. So if you're worth 20 million, take that 7 million over, tax it at 40%, and then your beneficiaries get the remainder of that. The proposal here is for those people.
And you said if you're single.
Well,
if you're
single.
married,
if you're married,
it doubles.
Yeah, if you do the proper trust. Yeah.
And so they're proposing eliminating the estate tax. Thoughts on that?
I mean, let's go. I think it should be eliminated. I don't think someone.
So
who's
you get taxed on
wealth,
it your whole life,
right? You get taxed on it when you make it. You get taxed on it when you spend it. You get taxed on it when you grow it, and then you get taxed on it when you die. It's like, great life. We're gonna take 40% of anything over this amount. And the situation, it's like I'm not sitting here saying like, oh, poor, people that have been successful, but you shouldn't. Those people shouldn't be hurt because they've been successful, and people shouldn't be put in a bind. Where a lot of this comes into play, where the people that are hurt the most are the people that can't afford to pay it. And when I say that, they're asset heavy, but they're cash poor. Like you've got some family legacy, like
to sell
farms, and so in terms of their net worth, their assets, they're worth maybe a lot of money, but if they come into a situation where all of a sudden they have to pay an $8 million estate tax bill, like now you're forcing those people to liquidate family farms.
There are people that make money literally checking obituaries and finding people in that situation and offering 50 cents on the dollar because they have to pay the estate tax. This is what drives me crazy. So, Democrats act like they're like anti-corporate America, right? But this is an example of where you're forcing family, and I keep using the farm situation because but that's a great example.
But you're forcing family farms to sell out to large corporations in these kinds of situations because those are the only people that are able to buy a $100 million farm with thousands of acres and all the assets that are tied into it. And so if you don't want corporate America to get bigger and bigger, help out the family farms and let them stay in business after what's the word I'm looking for? But after some of the family passes, and don't force them into a situation where they have to sell because it's gonna get bought by some large corporation.
Exactly.
Right?
I'm gonna have a 20-second rant on this because I'm with you. I can't stand taxes, and if you look at the history of our taxes in this country, we didn't have a tax until World War II. Basically, I know we had one in World War I and one in Civil War for the North, whatever. But basically, taxes didn't start. We've had taxes less than 100 years of our existence. Yeah, on income. So we somehow were able to build this nice, America flourished in the 20s and so on without an income tax. This idea that we have to tax everybody and take it from every pot of thing, it's because we have drunk sailors running our country.
Yeah.
And we have a deficit, and they have to find ways to bring in dollars so they can fund foreign countries that we don't need to fund, and so on and so on and so on. And it does frustrate me to no end. The tax stuff drives me crazy. So anything that helps, amen. I'm for all of that.
So I'm going to go to one that hurts now. So,
oh gosh,
as you guys know,
This is a very up and down podcast, highs and lows.
as you guys know, I'm a huge fan of HSA accounts.
Oh,
So
yeah.
health
Yeah.
savings accounts, you can put money in tax deferred. You can invest in an HSA. It grows tax deferred. Well, really not even tax deferred, because if it comes out for an eligible medical expense, it comes out tax free. It's the only way that you can completely
Triple
skip
tax
taxes.
benefit.
Triple tax. What did you say?
Triple tax benefit.
Benefit. I thought you said benefit.
Oh, maybe I
he
did.
said benefit.
I'm like half checked out on this podcast.
Triple tax benefit, and it's the only
have to
account
watch it
that's possible. So the government's kind of figured out that it's such a good account. So they're proposing to replace HSAs with a $9,100 Roth style USA indexed to inflation. So this option would replace HSAs with a universal savings account indexed to inflation, and that would raise revenue by about $110 billion.
And so the contributions would not be tax deductible on the front end, but then would grow tax deferred and then potentially tax free if used for qualifying.
And it sounds like, just from this short excerpt, it sounds like you wouldn't be able to invest it. It would just be indexed to inflation.
Yeah, index to inflation. Wonderful. That's horrible.
Yeah. You can get 2.8% return.
I mean, the HSA, the one thing that, it's a great tool, huge tax benefits. And it's one of the things that, our healthcare and medical system is so jacked up
Yeah.
and so freaking expensive
Yeah.
to begin with that it's like, well, before you start taking away some benefits that try to at least help us make this more affordable, maybe we figure out the affordability side before we start taking away some of the benefits. So yeah,
Oh, it drives me crazy.
Valid point.
I'm
Here's a great one.
Okay.
Get you guys
Get me
excited. This is
happier.
going to get people pumped up, okay? So, as you guys know, in the Tax Cuts and Jobs Act back in 2017, Trump lowered the tax rates from 35% on corporate income to 21%. The current proposal is to lower the corporate rate to either 15 or 20%.
Let's go.
Yeah, 15 would put us in line with Ireland, for example. I think we would be one of the lowest in the world, right? I know.
It would be low.
I think Ireland's one of the lowest, and they're 15. So yeah, hey, I'm amen.
But if you, never mind.
Hey, the argument on
I'm
the
gonna
taxes
quit bashing. the other side.
in 2000, was it 19 when the taxes actually, like the tax returns for 19 is when we actually saw the tax flows coming in from after the tax cuts. They were there was actually more revenue than before. Sure. This is the point, because you bring business back into the country. It's a no-brainer.
Right.
Back to that small business thing you were talking about. You know how we're tackling the small business and the estate tax and all that stuff, and I'm kind of going on a rampage, but small business is what drives this country. So you think about this place right here, Mach 1. Small business owner, all of us benefit. So his wealth that David's built for himself, and as he's grown this business, has become a bigger place. All of us benefit here.
Sure.
It's not just that one person.
Right.
So if something, God forbid, happened to David, and he's not single, he's married, but I'm saying, like in the example, if they had to liquidate this business,
Yeah, it would impact a bunch of people and families, and for sure.
And you go across the country and think about how, and then the corporate tax stuff and how that affects and how we bring more business back in. And that's what makes America the best country in the world. So I love that one.
Yeah.
Eli. So you're 2 and 2 right now.
My favorite thought on that is 15 cents of a dollar is a lot more than 0 cents of a dollar.
100%.
Yeah.
And that's what's been happening.
And that's what they're proposing is we're trying to make America a place where low taxes on income as well as upon death. Yeah. Making a country where if you want to start a business, this is the country that benefits you personally the most to come start a business.
Exactly.
Well, that's when you think of government debt, and we're trying to get the government debt under control, you either have two options: cut spending or raise revenue. And if you can incentivize more people to start good businesses, Palantir, Apple, Microsoft, you have the best businesses in the United States because of the environment that we're setting up and proposing, so that we can continue to remain one of the strongest countries in the world.
Yeah. Yeah. I mean, think of, so I saw, and I'm going to butcher these numbers, but like NVIDIA, I think it was, I talked to you about it. Was it 2/3 or 1/3 of their employees?
Oh yeah.
Were worth,
I think it was like 70-something%.
Yeah. Were worth like $20 million or more or something on paper.
Unreal.
Now, a lot of that's probably unvested stock options or things that, but
as of January 2025, 78% of NVIDIA employees are millionaires, and half of them, 50%, are worth over $25 million.
Unreal.
78% of people that work at Mach
So-
1 are not millionaires, unfortunately. We've not been quite as successful as NVIDIA. But that's a perfect example of where else that doesn't happen anywhere else
No doubt.
in the world.
That
Like
new one
that-
over in China, the Cheetah AI. What is it called? Cheetah AI or Copycat AI? What was the name of it?
What?
The new one that's
DeepSeek.
Oh, DeepSeek. Sorry. So I guarantee you, 78% of
We're
their
going to get
employees
canceled
are,
for that.
are not going to be millionaires. The top 2% are. Anyway.
Cheetah.
Erica's sitting over here is like, we're going to have to redo this entire podcast.
I forgot the name. I just.
Yeah.
Anyway.
Okay, anyways. Yeah. Anything else?
I'm out.
Okay. Well, there is a long, as you can see,
Yeah.
this is
I
a
skipped over a ton.
pretty
Well,
thick,
we should do it.
pretty thick report.
2-hour podcast on
Let's not.
tax codes.
But there's a lot of things. There's a lot of good in there, and there's always going to be give and take,
Mm-hmm.
right? We're not going to be able to accomplish everything at once, but I think a good percentage of that is a step in the right direction, in a lot of ways. So we'll see what they can get done. Hopefully, America starts moving in the direction of, lower taxes and incentivizing entrepreneurship.
Yeah, I think
Which is what our history is built on,
Exactly.
right? I'm not saying that like we haven't been doing that at all, but like we've been kind of trending in the wrong direction.
We have been
for a
trending
while.
in the wrong direction. I like the new direction.
And I think no matter what side of the aisle you sit on politically, we can all agree that keeping our government debt under control is a highly important part of something we should be focused on.
100%.
So,
100%.
No matter where you sit politically, I think these can be a good thing. Of course, they're going to impact some people negatively, some people positively. But from a big picture perspective, if we can start to get our government debt under control, that benefits everybody.
Yeah, and the debt is owned by a lot of foreign countries like China.
Primarily.
Right. That's the point of why we should get our debt under control as just for security purposes of the United States.
Well, and
Longevity of the
you
United
hear
States.
a lot of, I think there's a lot, immigration is a, thing that gets tossed around and kind of bashed and like,
Yeah.
it's like, we got to figure that out, which we do. But if you go talk to someone who immigrated here legally
Yeah.
and they came to America, a vast majority, if not every single one of them, would tell you they come here because they just want an opportunity. Yeah. They just want a chance to make a better life for themselves, to make a better life for their families. And we have to keep that, right? We have to stay that part of the world that people look to us as not a place where they can go get handouts, not a place where things are going to be given to them, but a place where, hey, I can go and I'm going to be given a fair chance. I'm going to be given an opportunity to work hard, and I can make things happen. And there aren't going to be so many restrictions and things that are going to, and hurdles that will,
Some of the best
Be a roadblock.
Americans are the newest Americans.
Sure.
They've gone through the process. I have a neighbor that just became he's across the street. He just became a legalized citizen of the United States. It took him for a long time to do it. He's a hard-working young man, has a family, awesome story, and he did it the right way. I mean, he's the most proud American you can find. It's awesome. It's inspiring, and that's the point about the immigration things. People think if you're against the open border that you're against immigration and you're racist. All these bad words are thrown out, but in reality, it's the people that do it the right way, which is sometimes hard. And I think they should make that maybe a little less challenging for less expensive, because it's expensive too and all that. I mean, there are things that need to be done to fix it, to make it better. But to your point, the immigration's not the problem.
Yeah, and if you like your home
So-
prices to continue to rise, immigration certainly helps. Go watch my data brief on home prices.
I will.
Nice little subtle plug.
That's a good little plug.
Anything else that we want to touch on?
Super Bowl this week.
Super Bowl Sunday night.
Next week we'll be talking about the Chiefs winning their third in a row, probably.
If the Eagles lose,
We should have Isaac on.
everybody
if the
call our office and ask to speak with Isaac on Monday morning.
Oh, that would be so funny.
So leave him a voicemail.
He's a passionate Eagles fan.
Yeah.
Yeah.
So, good conversation. I was a part of about half of it, but it was good. A lot going on. We'll see how the tariff situation continues to unfold and how the market reacts. So I'm sure there'll be a new headline coming come next Tuesday for us to talk about. But as always, we appreciate you guys listening, checking us out. Thank you for following us faithfully. Give us a like, comment, subscribe, email us with any questions you have, and we'll see you guys next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. Mach 1 may only transact business in those states in which the firm maintains a notice filing or has qualified for an exemption or exclusion from registration. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com. Thank you for listening to the Market